Hello and welcome. It's the 4th of December 2018, and I have completed the spreadsheet. I think if all the data and formulas are incorrect, I'm going to talk about that at the end of the video, as only a few people, of course, would be interested in such of an event, but I know some would, so I want to go over it. And how this is programmed to do is to take previous data of coins or of trades and then see how well the results would be via trading. And I have the information we put in here, which gives the results on the right hand side. What this means with cell 1, cell 2, and the rest, 1.15 means I have asked at 15% of a gain, or my portfolio would be worth 1.15, then I want to sell. If my portfolio gets up to 1.44 worth, which means after I sell this, if it goes up an additional 44%, I want to sell again. And of course, you can change these numbers as you wish. Buy 80% back, so if it drops 20%, and if it drops 40%, sell to, which means after I sell at 15, how much do I want to sell? So if I want to sell it back to 1, I would sell 0.15. If I put in, say I put 1.01 in here, which I will do, we can see that your net gain right now is 4727. This will change it. 4.997 in this case. What you're doing here is you're selling just 0.14 of the 15. And if I say go 0.99, which brings it to 4.906, that means it's going to be worth 99%. So selling a little bit more. Thus, you can see there should be more trades at such. I see a little over a million or million and five I handle. If I go to 1, we can see there's less trades because of such. And then in this here, you can change the volatility. So say I want to go long term, I could put 1.3 here. Does that change the number? 47 to 48. Maybe it goes 0.75. That changes it to 0.5277. Let's talk about really short term. How about 1.08? Still 47. Of course, I haven't even stated the code yet. I will in a second, because I don't even know what this coin is, which is odd since this is a file I've downloaded and I've had for a while. I just took the random one that I had. And if you're selling at 8%, maybe you want to buy back at, say, 93. So that brings it down to 3.9. And then let's just go, say, 0.85 or even 0.8. 4.16. This coin is in that of CRP. Maybe that's spelt wrong, because I never even heard of CRP. I could have easily typed it in wrong, but I got it on November the 8th, which was only less than a month ago. I don't remember downloading it, but I did. So I put that data in, and within it, it started at 72.15, and it's now at 77.26. So pretty much break even, marginal gains more than anything. Now within such, we can see here that it would have sold. I should put commas in here maybe. Okay, so I sold 1.5 million, or I sold and bought 1.5 million, which means that I would have 12,897 back. So basically, you're just in and out selling all the time. Buying, costing 30.58 Bitcoin, you would be selling for 34.746. I'm using a 1/5 of 1% rake, or 0.002% as a decimal. And then in total, you'd have 4 Bitcoin in your possession, plus your altcoin would be worth 1. So you'd actually be up 1 more than whatever this number states. So if this says negative a half, you'd actually be up a half, because that would mean that you would have spent half of more on Bitcoin, and yet you'd have a portfolio worth 1. So 1 plus negative a half is plus a half. And also of note too, If you're in the business every day of waiting for an 8% gain and a 7% pullback, your sell average will be pretty much around that 8%. Meaning, the differential from high to low on here, this is the average buy and sell, would be about, well, that 8%. But it's not here. It's about 300 basis points or 15%. So how does that make sense? Well, what happens if you get 25% sales? Or what happens if it doubles that day? What you did is, say the market was at, say, 10,000 Satoshi, and if you're selling for 8%, that means you got a sell order at 10,800, and then another one in around 13,000. But what happens if you log in and that's at 20,000? Well, now you're selling a whole bunch. And because of that, you're able to get the good deals. The same thing on the downside. If it crashes big, if it goes down, like, say, 75% in a day, I'm not saying it did, but I'm just saying when it does happen, that means you bought when it went down 7%, an additional 20%. But if instead of buying 4 more or 5 more times to that big crash level, you'll just buy once, you'll get a better deal, which will help you out in the long run in that sense. So therefore, let's put some bigger numbers in again. So we're at the 4 number. Let's just say 0.575. Do a double here and say 1.33, we'll say. Numbers practically stay around the same, but either way, there are gains within the market. So what I do in here, I got date, close, high, low. So therefore, whenever I get the data from Crypto Compare, which is where I'm getting the data from, and I'm going to show you an example of a code I just downloaded called CDT1204.XLSX. And what I did is, well, first of all, you have to look at some numbers in here. And I knew this was going to happen because of, I could tell on the web page, but look at all these prices in here. You got a bunch of decimals, 127, and here you got like 977, and then you got 6778. And there's a lot more of them as well, 25,000. I'm not even going to count them. So therefore, what I'm going to do is I'm going to take, I've already copied and pasted the data into here. And I don't even need the date for that matter, but I'm still going to have it anyway. What I need is the close, the high, and the low. And the open means nothing, because I need the high and low to see where your buy and sell orders would come into play. And I need the close because at the end of the day, or at any given time, you see that the price is at whatever, and you need to do a market trade based on whatever's happened. It can do it. So therefore, let's put the data into the spreadsheet. And where's my spreadsheet? Right here. Therefore, we'll just come in here and paste. So it started at 13,270. And let's scroll to the end, because what I'm going to have to do in this is either delete some rows or add some. It's an annoying bug that I could fix, but it's whatever. Okay, so here we go. I'm going to remove everything in here, and I'll explain these columns in a bit. Okay, so looks like that's 8,700. Eight decimals. Number. So the market is actually down marginally. Oh, we know this is going to be up. up 2.765 using these numbers. So you'd have 106,000 buys, 7.83 Bitcoin. You would sell a little less and sell for decently more. But when your buy average is 73.50 and your sell average is 11,000, that's going to happen. So let's reduce this volatility a little bit. Let's put in, say, let's do like 120 something, maybe 123. Number stays about the same. Maybe go 1.44 here. Lower a bit. Let's reduce this to say 0.75 as well. That's even lower. So short-term trading, not so well, but still, you are profiting very, very nicely. Let's even go more short-term. Let's say 1 and a dime. Goes down. That's down. If I go like 175, what happens if it goes big? Doesn't change much. Maybe if I buy for a higher low price, I'm actually not doing as good. If I go, and I've been getting, I've only done this, and I've also done Cloak and Litecoin as well. So either way, however you do it, it works. Now as far as, again, the sell to, if I decide to sell this to say 0.99, which means I'd sell a bit more, I would get a little bit more profit. 9.8. So that's something of note. So basically, if I'm planning something to be worth 1 unit and I want to sell it when it's worth, say, 125, then I want to sell 0.28 worth at that. So it'll be worth 0.97. So therefore, technically speaking now, it wouldn't be a 20% decline. It'd be like about a 16% decline, because 17, because you're waiting for, or 17 over 97, because you're waiting for 17 basis points to fall to 80. And to sell, the market has to go up a little bit more to get to your next point, whether you get the sell to target or whether it gets readjusted the next day. Because that's what would happen, is all the orders would get readjusted after a trade would come into place. So that's that for now. I still want to do some more tweaking just to make sure that the formulas are correct. As I've had an interesting few errors to start off with, 2 or 3 things I had to correct to get such to work. It started off by stating that I spent like 50 Bitcoin on Litecoin and I sold for like 20. No, that wasn't right. And I had 2 Litecoin or 3 Litecoin left when I actually had like hundreds or 100 or whatever 1 Bitcoin was worth a few months ago, because that's when I got the data. So that was, and then I fixed all those errors, and then I think it's good. So let me just show you how this is programmed. So those who are left or leaving, thanks for watching. Of course, this is going to be more mathematical, computer programming based. So I put the data in here. And ownership. Let's start off with, however, right in here is the original buy. So I'm starting with 1 Bitcoin. And that's where we do there. You find out the price of the close for this day. So whatever this price is your entry point. So ownership, that's how many you would own to start. High value. What does high value mean? Well, it takes this number, which is the ownership, and multiplies it by the high. So therefore, at that time, your portfolio was worth 1.01. So on this day here, when it was worth 1.72, that means the market, we can see, closed at 1917 but had a high of 2,500. So therefore, there was selling involved. And we can see in here that it sold 1,552 at the 0.28, because we want to sell for at the 125, and it needs to sell 3 basis points more. So what I ask on the computer language script, and you can see although it's hard to read, you need a full screen, you can see it. But what I'm doing is I'm asking the computer with the if statement if the sell order, if this number here is greater than this number here. Because if it is, that means my sell order obviously hit. And therefore, I can make the sell. I have to calculate the sell order price, which is relatively easy to do. Where is the sell order? Right here. So the sell order takes the H6, which would represent what fair value is. And fair value represents 1 divided by F6, which is what is 1 Bitcoin worth. By knowing what 1 Bitcoin is worth, which is this price here, I know exactly that if I multiply this by the number, that's what the sell order would be. So that this is what the number is. So 180736. And therefore, to calculate this, I take this number, 0.28, divide it by my sell order, which is this number here, and then I multiply 1.002 because of the rake. I have to sell a little bit more than required. See, if I didn't have rake, I could just do this, and I'd sell 1549. I didn't want to chart. I'm trying to push Control Z. I guess an easy way of doing it is just go like this. So I have to sell 3 more for rake, basically. Adjust own. Now I'm using the adjust section because I'm going to need the previous number from before. So after the sale, I have 1,552 less coins. I'm going to need to know that in case I sell again. And at this point, the adjusted high, when the market got to its highest point, it was worth 1.34. Now, when I look at this here, we can see that the sell order never happened because for my second sell order, I need a 75% return, which didn't happen. Now, if I put in, say, 1.33, then now all of a sudden it would happen because the number would have hit 24,038 and the high was 25,000. So it would have been good enough, of course, to make the transaction. So on the second sell, I basically, to find out where you're selling, that's easy. I take my last sell order price, which was 18, and I multiply it by the difference. Of course, that would be this number here, the 133. So that figures out what the sell order price is. And then doing the same mathematics to get the sell amount. So that takes care of all the sell orders. And I'm basically doing the same thing within the buys. So the low value, taking low price, and that should never be 1. So this is what I want to make sure that the low is 1458, the close was 1463. The rake, that would make sense. And you can, maybe, was the rake that high though? That takes the F6 multiplied D6. So I'm taking the low multiply ownership. The low buy order is in, and of course here's where we get hit. So I do the same math here, as if the price action, and I have this set at 0.8 if this is 0.2. There's the 0.8. So if this number is under such, then sell the 0.2. And then in here, I take this divided by the or the sell order, low buy order price, and I multiply 0.998 because of rake again. I have to pay a little bit more, so I have to subtract the 0.002. I do the same thing here. I adjust the ownership of what it would be because of the buy, the adjusted low value, and then of course the trade would come in then. Now what I have to do here is determine, is everything still okay? Because what happens if there's a day where I get buy and sell orders hitting the same day? Or if there's money to be back where I got it set to go up on a 1.33. If it goes up triple, I'm going to, my last sell order was like 50,000 instead of like 200,000 or even 70,000. It's going to see that and then make the trade. So what it does, I know exactly what I own after the end of the day. So I take what I own, add my buys, subtract my sells, and then I get the adjusted value by multiplying this by the close. So now I know what it's worth. So on this day, the market went down pretty big that it was still worth 0.74. So I was pretty much forced to buy 0.25-ish worth, which is what it did right here. Because it asked the computer, okay, is it in situation? Is it below that number? So is it above 125 or below 0.8? And if it is, then I want you to take the differential of the two, and then again find the cost. Here's where I add the total buys up for the session because there was 3 different spots to buy, 3 different spots to sell, so I just add all 3 of them together. So there's the total buys, the total costs, the total sales, and then such in here. So to program this, I mean, just take the sum of all the buys and sells from in here. That's why this column is here in the first place. And then the Bitcoin, same thing. This number is this number divided by that. And then this number is to subtract this too, and subtracting again. Subtract this from this and this from that. So that is how this was set up. Still not too sure how accurate it is, but it looks, just by going over all of the individual results in here, that it seems to be working pretty much as I was intending for it to do. But the net so far, I'm going to look at a whole bunch of other different codes, is that it really doesn't make too much of a difference whether you go long term or short term. The bottom line is that it's always going to accomplish what it needs to do. And that is to ensure you get as many of these trades as possible, and that this number is noticeably above this. In this case, the differential is 1,300 points from 800, 16%. Again, you normally would only be getting about like 9% moves in something like this, or 9% differential. But you have those days where you have tremendous buys and sells because your buy twos and sell twos get executed, and even the third one might get executed as well. And that's what's going to make that come into place. And always when you play for the big percentage moves, it's always going to have a big buy, low, and sell average, but there's less trades. So in this case, you're up 2 Bitcoin, 3 basically. But we'll just use the number 2 in reference comparison. That if you do this, there's going to be a lot less than 200,000 trades on each side. So if we put in, say, 0.4, 0.7, 7, we'll do 1707. Sell 2, we'll do 2.2. And sell one, we'll do, well, if we're doing 30% down, that would be 40 something percent. So we'll go 1.44. Now all of a sudden, you're up a bit better. Up a bit better. But remember, if you're doing the smaller moves, that you're able to get more trades in during the day because of the fact that markets will go up and down and up and down again, maybe multiple times, a few times a year. And thus, you'll have even extra volume that way. Where if you're trading this level, this is where you don't need to log. I mean, you log in your computer once a day or 4 or 5 times a week, and that will work well for you. And in the spot like this, only 73,000, but the sell differential, 8,200 buy, 13,000 sell. So that's a differential of magnificent proportions. And these numbers are relatively a little bit different, but however you look at it, mathematically speaking, this is what the whole intention of doing is. And the format again that I'm using is for the base currency always to be 1. And thus, in a spot like this, if Bitcoin is your base currency, then that means that you're going to try to accumulate more Bitcoin by doing such. So in a case like here, you would have accumulated 2 2/3 of a Bitcoin, and then 3 2/3 really, but when you consider the value, of course, of your altcoin that can go into Bitcoin at any time. So to be up 300% on a price that goes down, that's really what it comes down to. 13,000 on the open, actually 14,000 really as well, because it starts off with this close number. So 14,000 down to 8,700. Okay. Yeah, let's see the thing lose 30-40%, and let's go ahead and gain that of 360%, or 367% yourself. Okay. That's phenomenal results. So that's why I trade this way. I have added this measure of trading with Litecoin versus Ethereum. And interesting, this was very, very interesting. I mean, this just shocked me large. I was looking at how much I would want to have, and I needed a lot more Ethereum. And I don't have much Ethereum at all. I pretty much doubled it today. So I decided to send Litecoin over. And right now my Trezor wallet has it set to send it really fast. You can choose if you want to send it fast, slow, economy, normal. And it is like it's so cheap. Even on the fast cost, it's it's a microscopic fraction of a penny to send on the fast speed. So the last 2 or 3 sends that I've had with it, it's been that way. But when I automatically log in, it's still at fast. So I sent it to the exchange, and then I don't know, maybe 3 minutes go by, 4 minutes go by, and it's literally there. It was like, that was super fast. So I have it set up that for me, that I'm trading Litecoin versus Ethereum. Ethereum is the base market, and that is what I'm trying to accumulate by doing such. And Bitcoin against Litecoin, I'm trying to accumulate Litecoin. And then I've talked about trading Litecoin against altcoins on Cryptopia. I'm trying to gain Litecoin within such. And there's my strategy. I would like to thank you for tuning in. Those who use it, I wish you the best of luck. But a lot of the luck involved is maintaining focus and discipline, realizing that this is a long-term game, and that there is going to be some down moves. As anyone starting this year, especially into like February and such, there's a good chance you're down, because these altcoins have pretty much went straight down with very not as attractive and less buying opportunities. Of course, each altcoin being different, some of course being magnificent this year. And that's really what it comes down to. The whole point of being able to outperform a market, do very well when it actually goes down. That is just so magnificent. Thank you for tuning in. Have yourself a great day. Bye bye.